Welcome back to FundaTech Insights, where we take complicated stock info and sprinkle just enough humor on it to stay awake. Today, we're talking about Hyperscale Data Inc., ticker GPUS. And yes, that sounds like a gym membership, but apparently it's a real stock. Joining me is our resident analyst, Maddie.
Hey everyone, and yes, GPUS is very real. Hyperscale Data is a microcap player positioning itself as an AI data center operator with a side hustle in Bitcoin mining, fintech odds and ends, and industrial equipment. Think of it like a buffet, except you're not fully sure what everything on the buffet table is.
So, like my uncle's Thanksgiving spread. Got it. What sector is it technically in?
Industrials technically, though their branding leans heavily into the AI narrative. That's been part of why people are buzzing about them lately.
Speaking of buzzing, what's the stock doing now? If it's still under $1, I reserve my right to raise an eyebrow.
Eyebrow approved. The latest pricing shows it around 28.5 cents, with a roughly 12% daily pop at last close. Market cap is somewhere between 50 and 100 million, depending on which data source you ask. And volume has been wild, over 30 million shares trading recently.
So the price is tiny, but it trades like it's giving away free pizza.
Exactly. Heavy turnover, small price. Classic microcap action.
All right, what's been moving this thing besides caffeine and enthusiasm?
Recent news has been all about Bitcoin, treasury purchases, mining expansion, and the company claiming a spot among the top public Bitcoin treasuries. They've been buying miners like they found a coupon code. Then there's the AI campus announcements and plans for on-demand GPU cloud capacity. On the corporate side, they wrapped up a sizable ATM financing program and announced preferred stock dividends.
Wait, you said Bitcoin and AI in the same paragraph. That alone explains half the Reddit excitement.
Funny you mentioned Reddit because retail chatter has been loud. There's also a notable short interest, over 20 million shares, which adds fuel to the maybe a squeeze speculation. But it's important to say there's no structured analyst-backed squeeze thesis here. It's just retail enthusiasm mixed with volatility.
So, in other words, proceed like you're walking across a frozen lake in April.
That is an extremely accurate metaphor.
What about the actual business numbers? Do they, have them?
They do. The most recent quarter reported around 24 million in revenue, along with narrower losses compared to the previous year. The company has talked about full-year revenue guidance in the $125 to $135 million range. And they've emphasized reducing debt while building assets, particularly Bitcoin.
So revenue is real, profits not so much.
Not yet. Still operating at a loss, though improving. It's early-stage scaling mixed with volatile asset positioning.
And how about the charts? Give us the technical tea, preferably decaf.
Price has been hovering between 27 and 29 cents recently. Support appears around 25 cents and more firmly at 20. Resistance sits near 30 to 35 cents, with the bigger hurdle around 50. Moving averages lean neutral to bearish because earlier price spikes skew the longer-term averages. And as for analyst price targets?
Let me guess. Crickets?
Crickets in a wind tunnel. There's no major analyst coverage, no consensus rating, and no institutional price targets.
So the sentiment is basically, ask again later.
Pretty much magic 8-ball territory, yes.
Okay, and wrap this up for us. What's the vibe?
Bulls like the AI plus Bitcoin angle, the treasury accumulation, the mining expansion, and the liquidity events the company's completed. Bears point to microcap risk, high volatility, limited coverage, ongoing losses, and dependence on both Bitcoin pricing and execution on their AI campus strategy. It's a speculative story stock until proven otherwise.
Translation: exciting, risky, and probably not for someone who gets nervous ordering at Starbucks.
If the phrase venti, no foam, upside potential scares you, maybe watch from the sidelines.
All right, that's all for today's episode of FundaTech Insights. Remember, folks, this isn't financial advice, just mildly entertaining market therapy. Catch us in the next episode when Maddie explains about the next stock. Till then, take care of yourself, bye-bye, and keep investing.